Hey traders, Raghee here, and in this Simpler Futures recap video, I'm going to bring to you 3 trades that we have open right now that we're watching and a few things to keep an eye on as these trades progress. Then a little bit about how we got in and maybe some opportunities to get back in again. And I'm going to start it off with the long bond and taking a look at what is more often known as the ZB contract. And you'll see here, we've been setting this up now for quite some time. This zone here has been in place right around 46. And as of the 30th of May, this zone between essentially this previous Darvis right here, we have a new Darvis, but remember, since the 30th of May, these 2 lines were already in place, this one right here and this one, and it created the zone that you have and that we've been traveling to and then selling off from. Now in that zone, what I like to do is put on an options strategy, which is a modified bearish long straddle called a strip straddle. It's a 2-to-1. Sometimes I'll modify that out to a 3-to-1 at the money put to call ratio, meaning for every 2 or 3 puts, because it's a bearish long straddle, for every 2 or 3 at the money puts that I'll purchase when this market comes up and tags 146, I'll buy 1 call. So 1 call to every 2 puts or 1 call to every 3 puts. And that's in case the market moves higher and helps offset the loss of premium of this trade. So that's something we've been doing, and we had a really nice day on this. The challenges to the downside would be getting through the 145, then the 144 handle. That's what's going to help here, because there's a slight chance that this is looking like an uptrend technically, but I think the narrative, the fundamentals are pointing to lower lows. So if we head up to 146 again, it'll just be yet another opportunity to go ahead and put on that 2-to-1 put to call ratio, aka the strip straddle. And in order to get a better idea of just the progress to the downside, we're going to want to see the intraday weakness we're seeing in, say, the 15-minute or the 30-minute time frame. See these downtrends remain intact, which would mean it's going to be pretty key for this market to stay basically below about 145.10, that area, 145.15. Let's see the market remain under pressure there and take that handle back out to the downside. All right, 2 other trades that we are managing is the long Russell. So interestingly enough, we ended up long Dow, large cap, and long Russell, the small caps. And the recent position is the as you can see here, the 1676 to 1680, that was an alert we sent out. We took a stab at this to the long side first on some short-term time frames with minimal risk. And then as we started to create more of a significant pullback, we call this the half-back entry for obvious reasons. We've come back half of the overall range. This half-back entry right here is how and when we got long, and we're still long that with an upside target at 1697. So if we actually trade back down to 1680, I think it's a reasonable position to get back into, but I'm looking for the Russell to continue to climb up higher. It's been a steady climb. You know, we got long here 1676 and 1680. So this is a nice little move here for the Russell. And the Russell was a position that did not keep us as susceptible to the volatility of Netflix dragging the FANG stocks lower, dragging the NAS and the S&P lower. So what also worked out well by focusing on the Dow and on the Russell is we were able to circumnavigate the potential volatility of Netflix. Okay, so what about the Dow? How did we get into the Dow? That was an alert that we sent out for the 120-minute time frame and a pullback, again, that half-back technique. Look at the current range, literally cut it in half, cut that current range in half, and look for the long position. In this case, it accompanied a few other key levels. It accompanied a previous Darvis support, as well as the 34 EMA on the high. So we have this long position built from there with an upside target of 25,070. So we're actually in this trade from much lower. The zone was 24,980, all the way down to 24,950, that area. And we're looking for a 25,000 70. So we're getting awful close. We've been kind of chopping higher, but I feel pretty good about the way we stair step. Kind of ugly, but we're stair stepping up this 5 minute, and our target's just a little bit above where we are right now. So am I concerned about this? You know, I'm not happy about it, but I think we're going to continue higher, and that's basically what we're looking to see. And if not, and we keep a lot of optional targets in mind. We keep stop losses in mind. So for a lot of traders, they're in with an unrealized approximately 50-point profit. And one of the optional exits that we use is something I'm going to talk about in the premium video. It's something that you can use to determine for yourself what is a reasonable amount of expected profit for a trade, and it's using something we call price movement ranges. All right, I'll see you in the next update.